There is a storm coming our way. Hey guys, welcome back. Now, something very interesting has just happened. With Cathie Wood only investing in higher risk, higher reward investments, normally we only ever hear her talk positively and bullish about how things are just about to turn around. And it makes sense, right? It's like going into a butcher's shop and asking, what should we eat for dinner? No surprise that meat would be on the menu. However, this month was different. In her most recent update, she was distinctly fearful. And it's a bit like the same butcher suddenly advising that we eat a salad. Not what you'd normally hear. And so in this video, the three things we're going to be looking at: what is Cathie Wood worried about? Why do some people think a crash is still coming our way? And then we'll finish up with some good news for crypto assets. As always, if you do enjoy anything in the video, then drop a like, and a big thank you to everyone who does. Okay, first up is something going on right now with the money supply, which has never happened in history.
Growth on a year-over-year basis peaked at 27% in early February of 2021. Now remember, when COVID started, the fear was that the global economy was going to shut down and go into a depression. And so fiscal and monetary policy makers around the world moved into action, and 27% money growth in the United States was one outcome. But the money growth rate started falling pretty rapidly. And over the last 2 years, it's dropped 30 percentage points. We're now down roughly 3%. That's negative on a year-over-year basis. We have never seen a 30 percentage point decline in the growth rate of M2 on a year-over-year basis ever. And we have also not seen negative year-over-year M2 growth since the 1930s. So that was the time of the Great Depression. So we're taking this seriously.
So what's going on right now is that the US money supply is contracting, and that's something that hasn't happened since the Great Depression. The Fed has realized that you actually can't just print trillions of dollars without there being ramifications, and they are slamming the brakes on in reverse. And the question is, can we get an explosion in asset prices that we all want to see with the money supply contracting? However, that's not all. The next warning sign that Cathie Wood sees is the craziness going on in US government bonds.
And we were also looking at the yield curve. So the yield curve inverted in July of last year and continued to invert and into, really, we got to more than 100 basis points. So long-term interest rates, as measured by the 10-year Treasury yield, were 100 basis points or 1% lower than short-term interest rates as measured by the 2-year Treasury note. And so that's usually a signal that the economy is going to end up in trouble and that inflation and interest rates will come down fairly dramatically.
Now, the next red flag that the bulls seem to be ignoring is the fact that the yield curve is broken. And this is the craziness going on with bond yields. Now, the yield curve should look something like this. If you're loaning your money for only 1 month, you should get a small rate. But if you're going to lock it away for 30 years, then you should get a higher rate. This is a healthy yield curve. And this is what's going on right now. If you were going to lend your money for just 3 months, you can get over 5%. But if you're going to take the higher risk and lock it away for 30 years, currently you don't even get 4%. So this doesn't make any sense at all and is broken. And it's also why someone like Warren Buffett, who keeps a big chunk of their cash in short-term government bonds, is laughing all the way to the bank right now because he is making an absolute fortune and with pretty much zero risk. Now, are bonds really that important? It's just an investment for boomers, right? Well, it just so happens that it's one of the largest investment asset classes there is. It's 100 times the size of the crypto market and about 30% the size of the stock market. So, yeah, it's kind of a big deal. So, what does this all mean? Well, something's gonna break.
So now we come to this question of, okay, here we are now. What happens? Surely there have to be some ramifications, economic ramifications. And we can see them now in the commercial real estate market, which from what we're hearing is basically frozen. And we're beginning to see more strategic defaults because deposits are still in outflow mode. So that could be a slow motion, I don't know if we should call it train wreck, but it's not a good situation for commercial real estate. But there is a hard landing possibility here as well. And so something's going to give. What is it? What's going to give? We don't know. It could be consumption if the unemployment rate starts moving up. And there are some indications that we're going to have some significant surprises in terms of the unemployment rate going up.
And that is what wasn't normal. She is clearly concerned with multiple red flags coming our way, and she sees the unemployment rate skyrocketing over the coming months, leading many experts to believe a recession is on our way. Now, the good news is that it wasn't all doom and gloom this month. There was something very interesting that happened in the crypto market.
I think the most remarkable of all the indicators that we monitor was Bitcoin. It typically acts like a risk off. It tends to do poorly during risk-off periods. This time it did the opposite. From March 10th, when it bottomed at 19,500, it has soared 55%. Ether has gone up 51%. So these previously volatile, risk-on metrics are acting like flight to safety. Well, we think this is a theme that you should be watching out for. What are Bitcoin and Ether doing? They are, by the very fact that they're being considered flight to safety like gold, that's really interesting and suggests much broader based adoption and acceptance than I think most people understand.
There is a major storm brewing in the distance, and it may come right overhead and cause the next big crash over the next 6 months, but it may just pass on by and not be too bad. However, we shouldn't ignore the warning signs. As much as I would like to be a raging bull and just say everything's going to explode higher, we cannot ignore the red flags. The money supply is contracting, something not one of us has experienced in our lifetime. The yield curve is broken. You can get a better rate on a 1 month than you can a 30-year, and that makes no sense. The commercial real estate market is in trouble and is pretty much frozen up. And obviously the smaller banks have just ran into trouble. And then we get the news from Apple that they're going to be offering a 4% savings rate. And this is only going to cause more problems for the smaller banks. And what makes this really interesting was how Bitcoin and Ether performed during the banking crisis. And so the big question is, if everything were to turn south, will crypto be dragged back into risk assets and take a massive hit, or will it continue to be a flight to safety? Clearly, the investing environment right now has some major headwinds, so just be careful of anyone who's just saying everything's going to be exploding higher. Be sure to have a plan for both directions and be content with how it all plays out. So there you are, guys. Hope you enjoyed. Now, should we really be concerned, or is this all just FUD? Let me know below. And for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.